today we've got Lachlan Pike with us. Now Lachlan's with Maple Brown Abbott, Global Infrastructure Fund based in Australia. So welcome Lachlan. Do you want to tell us a little bit about Maple Brown Abbott? We understand that you're a shareholder and you're an investor in the fund. Is that very important that you are an investor with others? How do you see that?
I think it's critically important. So myself, along with my three partners, own a significant portion of Maple Brown Abbott Global Listed Infrastructure, along with our co-partner, Maple Brown Abbott. So my alignment is very much to the success of the business, and the success of the business will only be if the funds themselves are successful. Secondly, I think it's very important to be an investor into the funds. I've put the majority of my own financial wealth into the funds and have done since the inception, and so I very much understand the returns investors are going. I understand the costs that are associated with turnover, or the costs that are associated with other factors in the fund, and it does create that strong alignment between investors such as myself and other investors in the fund.
So why infrastructure assets as an asset class?
We think there's some specific advantages to the infrastructure asset class, and the real joy that we see in them is that they are very strategic assets. So because of their strategic nature, they're the water utility that you use in the morning, they're the electricity that's providing power to this room. They have very strong regulatory, contractual or concession structures. And what these contract and concession and regulation does is ensure that these businesses have very low expected cash flow volatility. So you do get very stable earnings, and those earnings are often able to grow at or in line with inflation over the long term. So you do get that stable income, which creates a differentiated exposure for investors.
Sure. Now, infrastructure is like a lot of things. There's different definitions of what constitutes an infrastructure. Globally, I understand in the infrastructure space there's 400 or 500 stocks. How do you want to describe your position on infrastructure definition?
No, certainly that's right. So if you look at the available infrastructure indices, or the stocks that are commonly defined as infrastructure, you're exactly right. There's about 400 to 450 companies. We then take a very strict approach to what is core infrastructure. So which of these assets can genuinely, in their contractual, their concessionary, or their regulatory structures, genuinely exhibit low cash flow volatility. So can they actually exhibit that back to investors such as us? We also then take a very strict approach to whether these businesses can genuinely pass through inflation movements over time, or whether they have a very strong pricing power within their market. And by putting those two screens onto the 450 universe, we only get about 112 companies globally that genuinely exhibit those two characteristics.
So 112 globally listed stocks. I mean, that means your screening is very, very strict. So that's fantastic. So tell me, why is Maple Brown Abbott different? And you've probably just told me by that, saying you're down to 112 stocks. And secondly, how often do you test your thesis on an infrastructure asset?
Maple Brown Abbott is different, firstly because of that very strict screening process. Secondly, we put a very particular emphasis on management and corporate governance within these businesses. So we think it's very important for infrastructure because a lot of these assets were previously owned by governments and were privatised. We want to make sure they're now being managed for the new shareholders. And we also like to make sure that the alignment between the management and the corporate governance is as linked as possible to the long term. We see ourselves being long-term shareholders, and we think management as well should look to invest for the long term, because that's what they are doing when they make infrastructure investments.
Okay, we're just moving a wee bit away from Maple Brown Abbott Infrastructure Fund, your particular fund, and looking at the bigger picture now, and looking at the overall. One of the things that has a major effect on the valuation and the prices paid, etc., for infrastructure is interest rates, because of the returns from it. What do you see about global interest rates now? Clearly they're low, maybe all-time low. What do you see, and where do you see it? How do you see it going forward?
No, we definitely think interest rates at the moment are at historical lows or generational lows. In our models, we actually do factor in that interest rates move up substantially from here. So to use one country example, the United States, the long-term 10-year debt rate for the United States is about 1.9%, a little under 2%. In our models, we have it moving up above 4%. So we do see...
Over what time frame?
In our models, we have that going out to 2021. So we think over the next 5 years, you will see long-term interest rates move up quite substantially.
Okay, so and what do you think the effect of those interest rate moves is on infrastructure assets?
It very much depends on the type of asset. So about half of what we look at are regulated assets, and with these regulated assets, the cost of debt to the business is actually a pass-through that's eventually paid for by customers. So the risk to these businesses is in the time frame between when interest rates move higher and when the business is able to reset its regulatory regime to encompass those higher rates within its rate structure. For the remainder of the business that we look at, so concession or contractual businesses, it very much depends on what has pushed interest rates up higher. So if interest rates have moved higher because inflation has moved higher, a strategy such as ourselves and infrastructure as a whole, which is often able to pass through and recoup movements of inflation, should be able to recoup those inflationary movements in the contractual or the concessionary structures.
Those regulatory reviews you just talked about, what's the sort of typical time frame? Are they annual or what are they?
It depends per country. So some countries we see the interest rates reset every year, so a very short period between actual interest rate movements and resets. In most countries it's more often a 3 to 5 year review period, so your risk is up to 5 years, but on average it's about 2.5 years before that review passes through. And then in some outlying countries we see those interest rates only reset every 10 years. So in those type of regulated environments, there is potentially quite a large risk if interest rates do move higher and you still have 8 or 9 years to go in your regulatory period.
So typically in your fund, back to your fund again now, are you more generally happier with a shorter or longer term review period?
At the moment, we are very much looking for those businesses that have the shorter term review period because we do expect interest rates to move higher. So we do see as a potential risk those businesses that aren't able to recoup those higher movements for quite a long time.
When you've got very expensive infrastructure assets, could be a pipeline, what risk do you see to technological advancements being disruptors to those long-term assets?
We definitely do see that, and it's important to say that technological advances for the infrastructure sector are both a risk and an opportunity. So a pure risk might be, say, in the cell phone tower market, that there is some new method of telecommunications that means you don't need cell phone towers. That I would flag as a risk. However, something like renewable generation or solar generation is actually in my eyes more of an opportunity for the sector.
When you're looking at on a global scale, what are about the political risk and the changes? And I mean, clearly this year we've seen the surprise of Brexit. Is there a problem there? I think one of the infrastructure assets that one might have looked to, or you may be invested in, could be the Eurotunnel. So is that at risk under a Brexit?
The tunnel itself is not at risk in our opinion. So the signatories of the agreements of the Treaty of Canterbury, which formed the formation of the Eurotunnel, was signed between the sovereign nations of Britain and France. It wasn't encompassing the European Union. However, I think what you're talking about more globally is we are seeing more and more of these surprise election results, or potentially surprise election results, and potentially some changes in governments that might occur over the next few years. From an infrastructure point of view, what we want to do is make sure that the contracts and the concessions and the regulatory structures we're investing in are able to very much survive those potential government changes. So looking for what is the history in the country of the legal sector, what have these contracts or concessions been challenged before, what have the results of that been, and very much that is a screening process for us, ensuring that we are not left owning businesses that might have those type of risks.
So very much understanding the contract, very much understanding how robust it is, and so it's quite part of your process, right?
Definitely, and we spend a lot of time speaking not just with the companies but also speaking to regulators to understand how they are seeing the world at the moment, what regulatory changes they might be looking to bring through, what the best practices are for them, and it's a large part of my role doing research.
I suppose it's topical at the moment, but we see an election coming up in currently in the US, and everybody's got an opinion on that at the moment, and clearly there's quite a groundswell of people looking for some change, or maybe just a change within the current. Are you concerned about the disruptors of coming through in these sort of areas?
For infrastructure, not particularly.
Right.
You know, the US election, whilst it may throw up some potential market volatility for the infrastructure sector over the longer term, I don't think it's a key concern. When we look more globally, there's elections coming up in France, elections in Germany. Again, there might be some volatility in the market, but for the infrastructure sector, I don't think there's much specific risk around companies because of that.
Well, thank you, Lachlan. Keep up the good work. We know the performance to date has been stellar since you've set up the fund. Good luck with that continuing, and thank you very much for coming in.
Thank you, Ian.